Hi guys, trading review of the week just gone. The week commencing 11th of July. So early in the week, Euro US dollar, the big number, parity 1.0, €1 for $1. Obviously, years ago, 22 years ago, we were trading well below parity. So it's a big number. The whole trading world is looking at this parity level. So for me, it had to be a buy. Suk sent it into the chart analysis channel. Let me just put a line on one. So weekly chart, you can see last time we hit we did a good pullback. Price came back to the area and then moved another, so it's 400 pips from there, and then it broke and retested. So when it came back up, classic, just missed, and then smashed through and did the move. So I know this was a couple of years, but in a weekly chart, it's not very much. It's not very long, not much time between them. So the more time between a level being used, the more significant it is. So the prices come down here after never being there before, and it's worked. So the next time, if it was another 10, 20 years, then yeah, bang, it probably would have just hit the number and gone. But after it worked here, the way you need to think about the markets is everything. If you control the markets and you wanted to take money from people, what are the most scheming and almost corrupt ways would you plan to trap retail traders like me and you, inexperienced people? So what I would do is, after we've taken the the parity buy here and it worked, and you probably find that price came back to the entry a few times just to get people out. It's gonna take me ages, but it's worth doing. Just bear with me, just so we can see. I don't even think it's gonna go that far back on the 4 hour. So we're on the daily. Yeah, so I knew it just wouldn't have been a straight easy move. So we got to the one. It's made a move, 40 pips. It's come back, it's breached slightly, it's pulled back again, and then on the third day it's come back yet again to the level and moved. So people take profits and then they take the risk off the table by, if it comes back to their entry, they'll close the remaining position. you shouldn't. It's a bad practice. You need to keep. If you've secured some profits, you then need to still allow price to breach past here slightly. So you need to leave something on the table to take something off the table. If that makes sense. If you're wanting to take profit, you have to leave some risk on the table. It just doesn't work being too safe. So a lot of people would have missed this move because they'd have profited. Well, they wouldn't have missed it, they'd have profited, but they'd have missed the real move because price came back down 3 times. And then even when it did come back again, and we said it broke, if you go down the time frames, it did work again. And then before the big move, breached the level, and then bang. So going back to how would you even a break retest to go higher there, so that probably would have caught people in buys before they sent it lower. So what I'm getting at is if you controlled the markets and you wanted to take money from retail traders who are inexperienced, this is how you do it. So after the one worked, everybody's going to be, new traders. There'll be millions of new traders coming into the market in these 2 years, all looking at this one level, because it would have been in the media, we're coming back to parity. They would all be looking to trade it. So what happens? It misses there. So they didn't want, the people who control the markets didn't want retail to get into it. But I'm just talking now as if this is how I would play the markets if I controlled things. So right, the retail aren't getting in. I don't want them to get in, so we'll short it before. And then the retail that are still left there, right, we took our profits from this level now. Retail, it hasn't got there, so retail traders are still going to be thinking, oh, here we go now, we're coming back to the parity. Smash it through. Take all their stop losses. We'll go 200 pips higher, and then bang, and then it's moved higher. So like I said, if this was a 20-year gap, it's the level would have had years and years of building up, and there might have been less sort of manipulation around it. But after a move, like this, a huge move down, almost 2,500 pips, it's got to work, because again, how does the market work? People only make money when they close their trades. When you close a sell position, that is a buy position, because somebody has to take that off your hands. So people are going to be in huge profits coming down here, and this is why key levels work, because they've prices come to this level here, and people have thought, right, I better secure some profits here just in case price doesn't breach this level, and then it bounces because they secured profit, which is a buy position. The buy positions caused the price to bounce off the level. So, and then you've also got traders who just want to get into the market to buy. So you've got profit taking and from the sellers and the buys from the buyers at the level. So the two traders go hand in hand, and they cause the market to move. So they continued making more money, and then it's come another huge move all the way down, another level there, which bounced because people thought, right, we haven't been down here for a long time, price might not get past, let's secure some profits, and then it bounces. So again, same thing happened, a big pullback. Then we have another big move, 800 pips down to parity, the number that everybody's been looking at for years and years. And it obviously, as price does come lower, more people start talking about it, more people get interested in it. And then if there was a pullback before, then it wouldn't have been of interest, because the market would have satisfied itself and its profits would have been taken. But because of the move down all the way to 1, the market needed to take profit, because the sellers are again be thinking, well, we might not get past 1, let's secure some profits. The buyers thinking, I've got to buy this. Both go hand in hand, the market moves. Now, for being, again, how would you manipulate that level to get rid of retail, so we can control all the positions, so we can buy more? You'd smash it through the level, a shakeout. So did 120 pips from the level. Then Thursday, 50 pips smashed through the level. USD CAD level. Everybody wanted to try and short USD CAD. I myself had the sell there, some buys in between. Didn't manage to hold on to any runners, unfortunately, because the buy runner got taken out by this, and then my sell runner got taken out by this spike. But 150 pips through the zone, and then bang. So that just gave me confidence that we were going to see some US dollar weakness, because it's a classic shakeout to get rid of retail traders, and then a move can happen, which is potentially what's happening on Euro USD now, with retail hopefully shaken out. So now price can move, and they've got all the positions that they wanted. So that is just how it helps the way you think. If you just think, what's the most corrupt way I could get rid of all these traders that I'm competing against, this is what happens. So it's a bad way to think, but you have to think like that, because the market is it's a trap for retail traders, inexperienced traders. So you've got to think like them and act like them. So I actually bought again on the spike on Euro USD, so because I had that conviction that this was going to happen, and I have to go with it because that's my feelings and thoughts. So, and I've still got my buy from 1. It's just people's appetite for risk. Do they want to chance hold in a position, and when people shit themselves and think, oh, US dollar's going to keep going, when it's just a classic sign of a shakeout for me. So anyway, I've talked on a lot about that Euro USD, but it's very important to know how the market works, because you can see these signs. Anyway, moving on, in the week we had a couple of pound yen sells sent into chat channel by Trev. So first we had this level, a strong move into it. I think you have to go to the 5-minute chart to actually see the move. Yeah, here. So it's a really quick one. So managed to get a quick some profit out of that one, and then a couple of hours later, I think we got to this level as well, and that was a really nice play, because it worked quite quickly as well. So that offered some really good pips, and it hit the main target that Trev set out as well. So that was a couple of nice plays there from Trev. And then oh yeah, my Euro Aussie, I had a, on my weekly chart, I had a buy and I stupidly cancelled it because I wanted Euro New Zealand dollar to line up, and Euro New Zealand dollar had already been breaching its level, so I chose not to take it, and it just did 150 pips, which is a smack in the face, but whatever. It was a pretty solid week, so yeah, that worked lovely. So that was the key level, the 23 fib retest of the big move down, and the 61 of the move up, just as the bottom of the zone. So yeah, that was a nice play. Shame that we didn't capitalise on it in the chart channel. And then to finish the week off, 4 o'clock, the profit taking, end of session, end of week. GN hit the level, GA hit the level. Just a little one to finish the week. So it's Trev didn't fancy that. I think it's been a solid week, so yeah, didn't fancy the risk on that one. So it is what it is, everybody makes their own decisions. If you've got an area you like, you take it. If you've had a good week and you don't fancy it on a Friday, then it's up to you. But that's the thing with chart analysis. All the areas are sent in, and then you make your own decision on what to do, and we just advise on we just say what we're doing. So that's the thing, to be a successful trader. You need to make your own decisions and use the charts to help your chart in your technical analysis, and then start executing with your own style, which you can develop by either aligning yourself to one of the traders in chart analysis, or developing your own style by journaling, and then optimizing your strategy. So anyway, it was a solid week. Very, very quiet for me personally. So it sent a video explaining why it's been a quiet week for me, high time frame trader. Price has just been driving away from my EMAs and my fibs in the same direction for a while. So it's you can see that on a lot of the pairs I trade, it's just been one-way traffic for a few weeks. Hopefully now, fingers crossed, we do see some pullbacks, and we can get some nice areas of interest and see some nice trades in the next couple of weeks. Okay, cheers for listening.